This is the Daily Market Comment by Howard Lombos Bisuros. I'm Maria Bashivadis. Thanks for joining us at XM.com. The US dollar rebounded against almost all its major peers yesterday. It failed to gain against the yen, but it is doing so today. What may have added some fuel to the dollar's engines were the lower than expected initial jobless claims for last week and the upside revision of the GDP for the third quarter. The data may have convinced some traders that the Fed may, after all, need to raise rates higher and for longer. However, the consensus has not changed much. Investors somewhat lifted the level of where they expect interest rates to peak, but they still see it below the Fed's own projection, while they are still seeing 50 basis points worth of rate cuts by the end of 2023. The reason why market participants have not dramatically altered their bets about the Fed's future course of action may be the details of yesterday's data, but also their preference to focus on more updated information with regards to economic growth. The number of Americans filing new claims for unemployment increased by less than expected last week, suggesting a still tight labor market, but continuing claims remain at highs not seen since January. As for the revision in GDP, it was due to upgrades in consumer spending and business spending, but with the slide in the housing market being deeper than previously estimated. This means that the risks of a recession in the US next year have anything but disappeared. Today's agenda includes the core PCE index for November, which is accompanied by the personal income and spending data for the month. Durable goods orders for the same period are also on tap. Although none of these releases is a major market mover, they still amount to new information on the U.S. economy. Durable goods orders are expected to have slid, while income and spending are forecast to have slowed. The core PCE inflation is seen slowing to 4.7% year over year from 5.0%, which could very well allow market participants to maintain their Fed pivot bets. Yesterday's better-than-expected U.S. data prompted investors to abandon equities due to fears that the Fed may take interest rates higher. This suggests that positive data could still prove negative for stocks, but recently the opposite was also true. Numbers that amplified fears of a recession in the U.S., like the latest PMIs and retail sales, resulted in equity selling as well. This was today's Daily Market Comment. Thanks for joining us at XM.com.